drove the market lower today?
Day on the markets, we were down as much as 2.8% at one point, so closer to 3% than that 2% mark that we closed the session down at. There were a few things to be aware of. It is school holidays, so we are expecting to see lighter volumes over the next couple of weeks, although that didn't flow through. And it does look like a lot of the views at the moment is that there isn't really a reason to buy Australia. We're exposed to China, which is seeing low global growth. There's nervousness around our property sector that we may see some slowing down there. We know that the banks need to raise more capital. So it looks like there's a lot of negativity surrounding our markets at the moment. And then on top of that, the market's still trying to absorb the US federal interest rate decision last week and wondering that perhaps the Federal Reserve saw more than the market and is worried about the growth scenario over in the US. So we do have global growth concerns as well. So some big losses. The worst areas were the materials, financial and energy space. And given that just materials and financial make up 60% of our market, we knew that it was going to be a pretty bad day, although the Australian market did lead the losses in the Asia Pacific region. And in fact, we've seen a positive session for the Shanghai Composite. So a little bit of a decoupling there in terms of performance. Having said that, there were a few bright points on the market. We saw TPG Telecom continuing to make a fresh record high, as has IPH, but altogether there was a lot of red on screen today, James.
Look, Julia, do you agree with the sentiment that there isn't, much reason to be buying here in the Australian market?
I think when you do get that overwhelming sense of negativity, this is when the market starts to get interesting. And if we have a look from a yield point of view, these yields are certainly starting to get interesting. I have no doubt that the banks are going to be in a pretty tough cycle over the next few years. And we have seen that bad debt cycle probably bottoming out, and we are going to see bad debts probably starting to rise for the banks. And this is a multi-year cycle that the banks do go through. However, short term, I think they have been oversold. So I think we are in for a bounce in the short to medium term for the banks. We know the troubles that the commodity space have been having, but on the flip side, we know how quickly that this can move as well. So I suspect that the volatility that we are seeing in these sectors, and indeed the market, is here to stay until we do get a more stable investing environment. The market doesn't like uncertainty, and unfortunately there's a lot of it around at the moment.
And if we thought that was good, Julia, IPH are shading it for the top spot. I have to admit, I didn't know IPH, Intellectual Property Services, a belter.
And that's probably because it only floated last year. So it hasn't been on the market for long, but it's up 93% in the year to date. The IPO price was $2.10. It hit $6.83 today. So doing very well. Intellectual property. And this is, I think, a trend that we've seen on the market. Those companies which do offer strong growth have been bid up so hard. And you only have to have a look at the market performance. The top 20 down 9% year to date, but the mid-cap index looking relatively flat, and the small-cap index also outperforming there. So it is these little companies that are offering growth that are being bid up so hard, and we are seeing the share prices running very hard. Not only stocks like IPH, but also Blackmores, Bellamy's in there as well. Very popular at the moment. Now, if we have a look at IPH, they're seeing strong growth across the Asia Pacific. They're doing acquisitions in Australia. So you have a strong organic growth story, and then on top of that, you have an active acquisition strategy, which is also adding to its business as well. So it does look like the strategy are doing very well. It is a niche business. It is a fragmented business, and they're collecting these businesses and picking them up. And it does look like another acquisition today. Pizzi's patent as well as trademarks, and the market getting behind that is going to be half cash, half equity. The equity will be issued at $5.41, and of course, the share price traded much higher than that today.